How's it going, everybody? My name is B, and welcome back to Your Altcoins. Today, we're going to take a look at the cryptocurrency market. We're going to take a look at some popular coins right now. We're going to take a look at some cryptocurrency news and try and figure out and understand what's happening with the market. There's a lot of red, and the market is down to $555 billion. It was up, guys. It was up. We were feeling pretty good, right? We were clearing that 600 billion range. The market had recovered from all that FUD that happened. See, we were down in that 462. We were as low as 428 at one point. And then we jumped up. We were rocking 632, and we've lost almost $100 billion in just a day. So what happened? We're going to get into that. I've got some news to show you guys that might be pushing the price down. This piece of news from 8 hours ago, Indian bank suspending Bitcoin exchange accounts. So we had the news coming out of a lot of different countries right now who are banning, blocking, putting restrictions on, and completely suspending all these different Bitcoin related accounts. And India has jumped on the wagon as well. Bitcoin exchanges are under fire in India as many of the nation's top banks have suspended or greatly curtailed functionality on exchange accounts. So Indian banks are now getting in on the action of shutting down accounts who are related to exchanges. This is not the first time this has happened, and this is probably not the last time this has happened. Mainstream banks are afraid of what cryptocurrency can do. So just as the mainstream of anything has always tried to shut down the innovation, mainstream banks are shutting down the innovation or trying to stop the innovation of cryptocurrency. And many of you listening right now might be like, B, what do you mean mainstream stuff shutting down innovation? Think in history. Think radio trying to stop TV. Think TV trying to stop Netflix. Over and over and over again throughout history, innovation is always tried to be suppressed by whatever came before it. Do you think the horse and wagon market was super excited when the automobile was invented? And I mean, sure, those first automobiles were absolute junk and barely got anywhere, but look what happened to the automobile industry as time went on. Television was just this weird box, black and white pictures and no sound, but eventually sound was introduced, color was introduced, and TV became mainstream. Before, the internet was super slow and it took you forever to upload a picture onto your screen, but now you're streaming everything at high speeds. Mainstream banks and mainstream currency, maybe even mainstream stock exchanges, don't like what the cryptocurrency market is doing to the financial world. Here is another article from the Business Insider talking about that very same topic. Of course, governments won't give up control of money. That's why crypto is crashing. So according to this article, Russia, South Korea, China, Algeria, Bolivia, Ecuador, Nepal, and Kyrgyzstan have all outright banned Bitcoin or made noises about tightening regulation around crypto that would make owning the currency much less attractive. Now, one problem with this article, and again, this is why you always fact check your articles and compare articles to another one, is this sentence right here. Governments are testing one of Bitcoin's central premises, that the alt currency is somehow immune to regulation because it offers uncrackable security, which is true. Unless you're able to execute a 51% attack, Bitcoin is very secure in terms of its ledger, with total anonymity. This is a problem. We all know that Bitcoin is a public ledger. The writer of the article has not quite done his research because it is not an anonymous exchange using Bitcoin specifically. And this is talking about Bitcoin specifically. There are privacy currencies out there that do hide the ledger, but Bitcoin is a public ledger. You can track transaction all the way back throughout the history of Bitcoin. In theory, cryptocurrency enthusiasts will tell you crypto allows you to hoard staggering wealth and the government can't touch it. That's why criminals like it so much, according to this article. But here's a lovely another article. Again, fact-checking. Bitcoin laundering less than 1% of all transactions. Bitcoin laundering less than 1% of all transactions. A recent report from the joint Bitcoin analysis team of FDD and Elicit, a Bitcoin forensics company, indicates that less than 1% of all Bitcoin transactions involve money laundering. Now here we are pitting the word of these guys against the word of these guys. Who's right? Who is wrong? I'm not too sure. We have no way of actually proving who's right and who's wrong. The report, written to help analyze the flow of funds and the danger of money laundering, has indicated that money laundering isn't nearly the problem that some critics of cryptocurrency believe. The report states, the amount of observed Bitcoin laundering is small, and darknet marketplaces such as Silk Road and later Alphabet are generally the source of almost all the illicit Bitcoins laundered through conversion services. So don't get mad at Bitcoin, target these places. Silk Road, Alphabet. Now here's a very interesting article I found. Bitcoin warning. Former NASDAQ chief says you can tell which cryptocurrency will fail. Now, he doesn't list ones that are necessarily going to fail. There's a very, very clickbaity title. Well, what he does talk about is actually very interesting. It's something I've talked about on this channel and I believe in very strongly. Watch this. Glenn Hutchins has revealed how public investors can know which one of the leading cryptocurrencies will be the right answer and continue to thrive. He predicted that some of the leading cryptocurrencies will fade away with only a few successfully taking over the marketplace. So he's talking about the fact that as time goes on and as cryptocurrency becomes more mature in its development, there are some cryptos that are going to fade away to nothingness because they can't keep up with the times. He compared the cryptocurrency battle at the beginning of the internet. I've been preaching this for forever. Refer to the original commercial websites online. He says, you want to be Google. You don't want to be pets.com. So he's saying you want to invest in the Googles of cryptocurrency and not the pets.coms of cryptocurrency. He says it's difficult to know which ones are the right answer. The price is a distraction. The price is a distraction. Boys and girls, the price of individual coins and the price of their market caps is a distraction, because money's being thrown around like crazy. Rather, you should focus on the means of exchange. Bitcoin could be the wrong solution, and other tokens like Ethereum or Ripple could end up being the right answer. Can you take that technology and use it as a solution for an important customer problem? I'm going to say that one more time. Can you take the technology that the cryptocurrency is trying to build and use it as a solution for an important customer problem? That's the question investors need to monitor. You don't want to simply invest in a coin because it's popular, because there's buzz going on. We're talking about investing, not day trading, remember. You want to invest in cryptocurrency that is trying to actually solve a real life problem that businesses want to get behind because they eventually want to sell to consumers. Do you understand what that means? The investor added, I just really think people are missing the point. They should be talking about the companies. It's the biggest opportunity I've seen because the two most important things are business information and value. We can now move information around the world at the speed of light at no cost. Why can't we do that with value in the future? He's talking right here about how you have to pay crazy fees to transfer money from bank to bank, the exchange of value, how there's fees around the exchange of value. So according to everything we're reading here, this gentleman, Mr. Hutchins, who's investing $4 million in early stage cryptocurrency, is interested in the technologies behind the company, is interested in the exchange of currency quickly and efficiently with low to no fees. He doesn't necessarily care about the coin or the price of the coin. He cares about the company and the project and the solution they're trying to create behind the coin. Massively smart advice. Something I want you guys to think about as investors. If you're day traders, you can ignore that. If you're investors, that's very important because we're talking about a 12, 24, 36, 48 month forecast here. Moving right along to a couple of cryptocurrencies I'm keeping my eye on back in the kind of day trading kind of world. There's a lot of talk right now in the Twitterverse about a few coins that are due for a breakout. Tron, a lot of hype around Tron as it continues to do this cup and handle formation with it getting lower and lower on the RSI index. Is this due for a breakout? Potentially. The one I'm watching like a hawk is Vibe, again for that cup and handle formation. You see here's the very obvious cup right here. This is stretching over 1, 2, 3, 4, 5, 6, 7 days. This is a week-long formation of the cup, and the handle is forming nicely. Are we going to see a breakout of the handle into new highs? That's the big question. The cup and handle rule, according to my research, states that the handle cannot go lower than about half the height of the cup. So if you see the price dip to that 8.6, 8.5 or lower, might be a bit of a problem. And it may no longer be a cup and handle formation, and the sellers may be too strong. And one thing I'm also starting to learn about is candle formation and what the candles mean. What's the difference between a very bullish candle and a very bearish candle? I'll give an example of candles that I'm learning about and researching. So we'll take a look at these candles right here. We have an uptrend going up, and then the bulls try to push this candle all the way up to here, the top of the wick right here. And then it retracted a little bit. This retraction signals that the bears aren't quite ready to have the price this high, and then it goes down. But the main candle that caught my interest is this one right here. This candle right here with this tiny red box and this massive wick above it. This massive wick tells me that the price started right here. The price starts right here on that hour. It pushed all the way up to this high. And then the bears were like, we're not doing that. They pulled it down and they brought it lower than its starting price. That is a massive red flag to me that this is a bearish run about to happen. And as you can see, because of that candle, it did end up going on a bit of a bearish run. And by a bit, I mean a lot of a bearish run. I am no expert when it comes to candle analysis. I'm still learning as I go along. I'm spending my nights researching, watching videos, reading articles about reading candles. That is just a little taste of what candles can tell you, because candles can tell you a story about how people are feeling, how investors are feeling during that hour, during that half hour, whatever you're looking at your candles. So overall, the market is down from its beautiful high we had at the beginning of the month. But you have to remember, everybody, we're only a month into this year. We're only a month into this year of cryptocurrency. Considering where we were a year ago with a total market cap of 17 billion, there's still plenty of time and still plenty of room to potentially grow. I hope you guys enjoyed this video. I hope you found some value in the news that I showed you, a little bit of value in the charts that I showed you, and a little bit of interesting information here on a nice lazy Sunday. I hope you guys enjoy your Sunday. And as always, thank you very much for watching.